I forgot my order. Do you remember what I put what I put my shorts at for or my longs at for AMC? I remember I was trying to catch a knife. I was
I
trying to
think
look
you
it
said
up.
22.
Did I say 20? Does that make
I think
sense?
so. Yeah, yeah, and that was off your Fibonacci's, right?
Yeah.
So we're landing like right on the exact same number using different styles, right?
Yeah. I love it when those are one of the more nuanced things like it's called Confluence. So when a bunch of different indicators are pointing to roughly the same price, then that's like a high probability target.
Yeah, for sure. Well, that's why I like using like multiple lines as well, right? Because like if I'm looking at a chart and like all I have is horizontal lines, it's like okay, it's kind of good. But then if I have an overall backside and then I have another trend line within that, and I have a horizontal line, and they're all kind of combining into one point, and the stock's going to hit right into that. I mean, like those are the kind of things I just throw my whole account at because I know it's going to work.
I noticed one thing you don't use a lot is RSIs or any of the other moving indicators like the MACD or anything, eh?
No. I just like honestly, I've tried playing around with them, and I just find it just like it just messes with me because it'll contradict what I'm doing a little bit here and there, and it's just like I just keep it so simple. It's like I don't know. It's just easier for me to keep it as simple as I can.
Yeah, I agree. Simple is better. I used to have a ton of indicators on, and I know people that have like, and I still have more than you.
Yeah,
And there's people that have like way more than me, and I'm like, how do you get any answers when you have like 8 different indicators? Like,
yeah,
and to be honest, like not like 6 out of the 8 are the same ones. They're all lagging momentum indicators. So it's like you kind of just need one, also, right?
yeah, exactly. Like the only indicator that I really use is basically volume. And like to be
Yeah.
honest, I don't really use volume as like an indicator. Like if I was playing this, like I've been shorting AMC now since like it was at like $56 because it's broken that backside, right? So I've just kind of been shorting this thing down on pops, until it gets back down to $1 or whatever it's going to be. Um, but yeah, like all I really use, the only reason that I use volume is just to make sure people are playing it. Essentially, like I'm not gonna try and trade something that's so thin. The spread's like $1 or something like that. But I mean, overall, it's pretty much just volume, and then I just use my trend lines.
I'm curious though, if you could draw your previous trend line, like the first one that broke.
Yeah.
Uh, I just want to see something because there's sometimes well, I only short Bitcoin, but when I do short Bitcoin, this is one of the things I look for. It's where I rely on the RSI
Okay.
because usually at least one of those diagonal trend lines will also coincide with the RSI divergence. So
Okay.
I use the diagonal as a confirmation. So what that means for those listeners is that you'll see the price peak, and then you see the price sometime later, like in the next high, we'll do it like a higher high, but you'll see a lower low on the RSI. So you got a lower low on the RSI and a higher high on the price, and that's called divergence. And then we draw a diagonal line. So as soon as you see a divergence, that's signal one to pay attention. Signal two is when it breaks that line. It's basically confirmation that we're on a downtrend now. The momentum is broken. So I'm just
Yeah.
curious if you pulled up the RSI, would there be any divergence on any of the diagonals?
Let's see. I've never used RSI in this program before, so just give me a second. Oh
Oh
wow.
yeah.
Okay.
Oh, it doesn't show up on
Wow.
another window, eh?
Um. Yeah, I'm not sure how to do it. I don't want to waste time trying to figure this out right now.
Yeah, no
Uh,
worries.
yeah, I'll just get that off of there now. Oh, hold on. I just took the price off of it.
I think real quick we could probably eyeball to see if there is one there.
Okay, there we go. There's the price.
Yeah.
But yeah. So like basically, what you're saying is like if you see the price trending up and then your RSI is kind of starting to trend down, then you know that people are losing interest on it, right?
It's
And that's
losing momentum. Yeah.
and the same thing goes for the opposite side, right? Like if you see the RSI trending down and the price is starting to trend back up, then that's also a divergence, right? Or is that
No, the price will continue to trend down, but the RSI will start going
right?
up.
Right,
Yeah.
right. And it's probably yeah. So you would combine that kind of like a horizontal level. So if we were coming down here, for example, and the RSI was starting to trend up, and we were getting pretty close to say this 42 dollar line, then that's probably a pretty good indicator that you can buy off this dip for that next move.
I would probably pay really close attention to when it hit that dip, and then I would buy it soon as it broke that horizontal from the top side.
Right, right.
Or sorry, the diagonal from the top side.
Yeah, yeah,
Yeah. So as
yeah.
soon as
That's
it broke that.
yeah. I just want to show one more here really quick. It's a smaller, like this one. I've just been like really, really doing well on this one over the past few weeks. It's XELA. I'm not really sure what the company is, but
It's like you read my mind.
yeah, but I've made a lot of money on this over the past couple of weeks, so I'll show it anyway. um, yeah, so same idea, right? The thing starts going up here. You just draw your front side, back side lines. Like this could be one. You could have another one, say from down here, right? So you just get all your lines in, and it's the same thing, right? So, if you take, we can do them back here, something like that. So yeah, like this was the first one right here. So on this move here, you can see this was kind of the big up move, right? And then so people look at this, right, and they're thinking, okay, well, the stock's up here, $3.70 or whatever. Like, why don't we try and short this big strong move up here and then fade it all the way down? Well, it's because for me personally, like this is so much riskier because you don't know if the thing's just gonna skyrocket out of there because again, this is all front side of the move. So the safer play, it's kind of a funny thing because the dollar reward is less like on the actual stock. So like if you look in here, if we get in on the backside here, we can hit this pop at say 270, and then we can fade this thing down to just the next two lows, which would be 203 and say 190, right? Just these two levels here is kind of like what you'd be looking to cover into. So if you look at that, it's like, okay, well, we could try and start shorting up here at 370 and then come all the way down here to $2. So we're making like $1.70 a share. Well, for me, like let's say you wanted to play, I don't know, a few thousand shares on this. Like I'm not comfortable putting that much size up here. Like I would never put that much size up here because this is just way too overextended for me. It's front side, it's strong. Like I don't know if this thing's gonna dip and just blow shorts out of the water. So why not just wait until the thing comes down? Because if it comes down to here, it still has a ton of room to fall. The trend started at $1.40. So if we're up here at 270, like there's still tons of room for this thing to fall down. So rather than trying to get in a little bit up here, like maybe you start at 330 and then you get blown out and you say, oh, 350 is going to be it, and then it runs up and it spikes up to 380 and then it blows you out again and you're getting frustrated. Wait till it comes down here. Just draw your lines in. Here's your little dip, right? At 268 or whatever, comes down, pops into that. You hit that level, and then just put full size. You can throw a few thousand shares on that without any stress in the world because it's going to hit that, come all the way back down to the next line, which it does every time. So, it's kind of like the way that I trade it always looks like I'm taking a much smaller portion of the move, but I can put way more size on it. So I'm getting paid a lot more by doing it that way because when I was doing it the other way, I was trading a lot more. It was a lot more like it might be more considered more exciting or whatever you want to call it, but it was also a lot more stressful and you lose a lot more because it's just a lot riskier up there. Like I'm at the point now where I just wait until it confirms and then I'll hop in and I'll just ride it from level to level. And it's the same kind of thing here. If it goes from 270 down to 2 and I cover and then it drops to $1.30, like I don't care because that's not what I'm aiming for. I'm just aiming for that one, the predictable move, the one that I know is going to happen, and then you get out and you look for the next one. Same thing over here, right? Here's your overall front side, and then it drops down, and then actually, if I put this over to, I'll put this on the candles so you guys can see it a little bit better. Yeah, so like if this is why I like the line chart as well because it's a little easier to find those levels. So if I put it on the candles, it kind of doesn't really look as clean. But if you look at it here, we basically wicked right into those levels. So if I flip this back over to the candles here for 1 second.
Those 1 hour candles. Excuse me.
Yeah, these are 1 hours.
So I just found something you'll probably find interesting. That trend line that you drew.
Yeah.
I know you can't pull up the RSI, but the peak on July 8th. So that was there's a peak on July 8th, I think.
On this chart?
I'm on TradingView, but there should be one top on July 8th, and there's another top on July 13th. So within that 5-day period, there's two tops. One was at $3.86, something like that, and the next one was like $5, something like that.
Yeah. So this is July 8th.
That's July 8th, right? And so the next
over here.
Yeah. Yeah, so those two tops were what we were just talking about in terms of divergence, because on the RSI they coincided with a slope, so
Okay.
a lower high, and then that trend line is exactly where you would it would be the confirmation that the momentum has switched.
Okay, so maybe that's something that I can start to use then to try and
Yeah,
like get them a little bit higher here. Is like if they are spiking up like that and you see that divergence on the RSI, then maybe maybe that's your indicator to start small here and then
yeah,
confirm and then add
yeah,
more once it gets below the line, right?
yeah.
Um, yeah, because like I'll just show this again and then I'll be done with all this. But if you look with the line chart here, we're going. Let's pull this down so it's right on. We're going, this is our front side again for this little move. And then this is kind of where I'd be looking for my level right around $4 here. Like that's where I see a base on the line chart. And then if we flip over to the candles here, yeah, you can see like, you had this big wick and it went, what was that? 5 cents over the line. And then, it just sold straight off back down to the bottom here, 325. So, you could throw a few thousand shares at that and you're only risking, 5, 6 cents and you can make, a couple $1,000 in a day, basically. So yeah, that's pretty much all I want to show is just the importance of, it's everybody says like, oh, short it or go long or oh, this is a great buy, but just always zoom out and look at the big picture and look at where the chart is. Cause like, that's kind of why I started with AMC because like when you look at AMC, everybody just, it's just this big hype chart and everyone's thinking, oh, it's way up here. And every time I look on Twitter, like even on Friday, everyone's thinking, oh, it gapped up on Thursday night or whatever. So everyone's like, oh, tomorrow's the day that we squeeze. And, it's going to them. And, I'm sitting here looking at this thing. I'm like, this is clearly backside. Like it has to come down to at least 26 before it actually bounces in my mind, because that's where that next line is, right? If there's no reason for it to turn around here unless there's a news release. So in my opinion, this will come down to 26 and then it might bounce way back up, but it's going to come to 26 first. So that's, it happens over and over again. It's not rocket science.
No, but I think that's an awesome thing you pointed out, because I think this is one of those things that only time can teach you. Because like if you're new, you're thinking there's no way it's going from 40 to 26. There's no way it's going from 60 to 20, like especially not in like a few weeks, right? But it's only
Yeah.
after you've seen it time and again, like you're like, oh shit, it does happen.
Yeah. Well, it just depends on how far apart those lines are, right? Because like when you look at those lines, like you call it no man's land. That's what, like people in the trading community call it, is because there's no play in there. Like, yeah, you can scalp around for a couple cents here and there if that's your trading style, but if you're trying to get like decent moves out of the thing, then you just use the lines. Like if it's at the top line, you short it. If it gets to the bottom line, you cover it, or you can buy it long if that's your plan. But in between is just noise. It's just chatter. You don't know what it's going to do. And in my opinion, for this particular chart, it's not dead. I mean, it's still overall front side until it gets below basically $22 a share. So this thing can absolutely still squeeze or whatever everybody thinks it's going to do, but it's going to go down to the 20s. It's going to go down to $26 first, and it might go down to $22 before you get that next decent bounce.
I'm curious, how's the volume looking? Is it on a decline or on an incline?
I don't have volume. Hold on, let me open it up on here. Let's see here. That's really ugly, but
Ooh,
declining like quite a
no,
bit.
but more recently, like that hard sell-off is inclining, so that's dumping. That's
Yeah.
not like a few people pushing the price. That's like three people freaking out. That's how I'm reading
Yeah.
it.